and welcome. You're watching Countdown right here on Bloomberg Quint Live. A quite subdued day of trade here for the benchmark indices, with the Nifty marginally in the red. The banks, though, have had a slightly more volatile day of trade. We'll talk about all of that and more in just a few moments. But for the headlines, the Monetary Policy Committee cuts the repo rate by 25 basis points to 6% and retains a neutral stance, also moderates its growth and inflation forecasts. The Nifty and the Sensex swing after the RBI policy to trade marginally in the green, but now moved into the red. Banking shares have declined. Jet Airways lenders will infuse 1,500 crores only after existing promoters Naresh Goyal and Etihad have pledged part of the stake in the company. SRF surges to a record high after it resumes production at its Dahej facility. Good afternoon, Neeraj. Today's move seems to be slightly more subdued on the indices particularly, but the banks have had a slightly more volatile day.
Yeah, down in the red when the policy statement came in to moving up in the green. Right now, again, as you can see, very jagged edges for the bank Nifty. So 3118 lying absolutely flat. The broader end of the spectrum to the mid caps and the small caps should come up on your screen. And again, out there, the moves are very, very flattish in session. So we were thinking that maybe pre-policy, the indices would remain flat and then they will pick up. For now, they're not showing any signs. The turnover should come up on your screen for a moment. Let's see what's happening today. Remember, it's also the Nifty and Bank Nifty weekly options expiry. So the F&O volumes would be higher, but cash market volumes very, very flat. Just a quick perspective of the heat map and see what's happening to the market breadth at the Nifty level. Almost similar to how we started off, maybe a bit more red than green, but even Stevens. IT has taken a big backseat in the session today. Reliance is down in the session today, so that's the other one. And what's doing well? Very few heavyweights like HDFC are helping. Bharti is helping in trade today, and selectively some banking names, Axis, SBI, HDFC Bank, for example, are the ones which are helping the Nifty stay afloat. But Reliance and IT, clear pain points in the session today, Devina. What about the broader markets?
The broader markets are suffering as well. So what the Nifty and the Sensex are doing is reflective within the broader market space as well. The advanced decline ratio, the market breadth seems to be negative at this point in time. Talking about the bigger losers in trade, oil and gas is a theme, and it's not just IT. IT, yes, the larger IT names have suffered, and so have some of the smaller names. But even oil and gas as a pocket, be it your oil marketing companies, be it your upstream companies, they've all taken a knock in today's session. Starting off with the Oil India, which is trading under by 1.5%. HPCL within the broader market space is marginally lower, and so is Petronet LNG, which is down about 2.5%. Some counters which have seen continued losses which have been building up. So we've got the likes of a Vodafone Idea, which have seen some amount of pain in the session, 5% after yesterday's big knockdown. And this is not a matter of just 1 or 2 days. It's been a continuous series of losses for Vodafone Idea. DB Realty loses about 7% in the last 7 days. Amar Raja yesterday had a big cut, and even after some clarity with regards to the stake sale and going to Brookfield, there's that overhang, though being out of the way, is still not done much for the stock and is still down in today's session. The Morgan Stanley is pretty upbeat. It's given a target of about 1,065 on Amar Raja. Volume buzzers, Lakshmi Vilas, SL Propack, Orient Cement, all these stocks doing well. Volumes have picked up on each of these counters. On the flip side, the stocks which are losing on the back of heavy volume, some pain points there. You've got a Repco Home Finance that dips in today's session. Volume is much higher than the last 20-day average, and Gujarat Fluorochemicals is the other one that loses about 4.5%. What's happening in the more liquid universe, in the futures and options space? Darshan joins in for that.
Well, even at this point of time, the market is extremely volatile. After coming back into the green, the Nifty is slipped back into the red. The Nifty Bank is also down in trade, but the cuts on the Nifty are much higher. Pharma as a space seems to be doing decently. Apart from it, the oil space is seeing a little bit of selling off. You're seeing open interest decline on the Nifty. Let's take a look at where positions are being taken. We are at the 11,700 mark on the Nifty. The Bank Nifty is also down in trade on very low open interest build-up. Let's take a look at where positions are being built. The VIX is absolutely flat. Nothing much to talk about that. If you can see, so basically what we're seeing is that the put writers are active in today's trade. Call writers have shed positions, but positions are being built in and around the 11,700 mark in trade. As far as the total open interest build-up is concerned, 12,000 continues to be the big resistance that the market is looking at. Now, if you're looking at which are the stocks that caught my eye, first of all, it is Amara Raja, not because of the price move. It managed to move up 5% and has cooled off, but the open interest build-up is decent. Almost 10% open interest build-up is something that we're seeing at this point of time. Ambuja Cement is the other one. Again, it's decent open interest build-up on the counter, 29% open interest build-up. that too on the short side. Repco Home is down almost 5% in trade. Open interest build-up there is also on the decent side, 21% open interest build-up. Indiabulls Housing Finance, over the past few days, again the traction continues on the higher side, again back to the levels of 900. It was at levels of 650 a few weeks ago, and SRF got the positive news that the hedge plant is now all clear. Open interest build up is 16%, it's up 4%. It's moved up. The futures is trading at a much higher premium, or 21 point premium. The move was gradual in the morning, but it seems to have picked up in the second half of trade.
All right, Darshan, thanks very much for that. We're going to keep an eye out on all of those stocks as we wind up the weekly expiry today. But the key focus of attention is with regards to what the Reserve Bank of India did today. The RBI's Monetary Policy Committee went ahead with the much anticipated 25 basis point cut to the repo rate, bringing it down to about 6%. It also announced that it will maintain a neutral stance for the monetary policy. However, experts are of the opinion another cut is unlikely in the near future. Hear it.
A 25 basis point rate cut is in the offing. More is unlikely according to me, because central banks typically move in small steps unless there is a dire need to do that, or there's a crisis or something like that. And right now I think there are too many moving parts going ahead, and I think food inflation is already making a comeback. Particularly if you look at mandi prices, I think many of the crops are selling above the MSP now in the last 2 to 3 months. So that will eventually get reflected in the consumer prices for food items as well. So there are things to watch out for. So I think they will a neutral stance gives them the flexibility to move in either direction. So they are likely to continue with the neutral stance and de facto be accommodative in the sense that they will cut rates in that stance this time.
Pretty much along the expected lines. I think we need to wait for some more detail in terms of their growth forecast, their inflation forecast. And again, the markets have not really changed too much, but that was probably because it was a widely expected decision, and I think the market had already discounted in the fact that we'll probably see a 25 basis point rate cut today.
The stance is not likely to be changed. They may continue with the neutral stance. I don't see any reason to move to accommodative because of the risks ahead. One, of course, is the Skymet's prediction of monsoon, though IMD has to come out with their version on 15th April. But looking at the reports from Australia and US, it looks like El Nino is getting developed, and therefore there could be a fair chance of deficiency in monsoon. But that would depend more on the special distribution also. We have seen some of the years where the monsoon had been below normal, but it has not resulted in agri output, because depends whether the shortfall is in the irrigated region or the rain-fed region. It looks like, from Skymet's prediction, that it's going to be more impacting the rain-fed region. So therefore, there is a risk. And also, throughout the year, past 1 year, we have seen core inflation to be quite recalcitrant. So if it is above 5%, between 5 and 6 and all, then I think despite your import growth weakening and various other, PMI numbers and whatnot, all these do not get reflected in the way core inflation is holding the fort. If that be the case, probably with the more volatile portion, though MPC has gone in for looking at more of headline inflation rather than core, but still there is a risk of fuel prices and the adverse base for food inflation. So these two also would impact the headline inflation. So even if you look at headline inflation, the chances are it would be inching towards the mid of the band, the legislated or the mandated number of 4%.
There were opinions like stance could be more accommodative, but I think yes, most of the people were accepting a neutral stance. But I think we really welcome the step taken by the Reserve Bank of India, where 2% XSLR would be counted for the purpose of LCR. So this would definitely release more money for the banks to lend.
Yeah, let's get in a market voice now to talk about whether there is a policy impact that we're seeing in the equity markets as well or no, and what could the way ahead be like. Tushar Mahajan, head of derivatives at Centrum Broking, with us on the show. Tushar, good having you. Thanks much for taking the time out. What's your sense, Tushar? Any change that you've seen, any dramatic change that you saw post-policy announcement in either the banking names or some of the other rate sensitives?
No, so I think the policy delivered pretty much on what was expected broadly from the market. So 25 bips rate cut seemed pretty factored in. There were some sections of the market which did say that, you know, probably there was a chance of 50 bips cut. That was not what our view was as well. And I think the non-change of stance on maintaining it at neutral to a large extent is probably been taken in slightly positively in the market, that if it was accommodative, then clearly growth concerns were coming much ahead. So I think from that perspective, because everything got delivered broadly on expected lines, we did not even see too much of a change once the policy announcement was made. Let's see how the press conference goes, but I think as of now, the policy headline was pretty much in sync with what markets expected it to be.
The banks, for one, have had an extremely volatile day, but you wouldn't take away from the fact that they've made their big move already past 30,000, have moved beyond 30,100, has come back down a bit. What would the trade now be within the bank Nifty, and if at all there are any specific banks that you're looking at from a positive light in the near to medium term?
So I think today obviously is the Bank Nifty weekly expiry as well, so some of that could have a role to play today. But I think overall what is happening is that we saw the Bank Nifty first touch its highs, followed by Sensex go back to its highs, and then Nifty yesterday intraday made a life high and then reverted from there. I think broadly the trend seems to be that we made a double top across all the three major indices here, and we could probably trend downward or maybe try to make a drift back to those levels. That's about it. Specifically coming to the banks, I think obviously 30,000 odd level should be a strong support on the Bank Nifty per se. The trade to play is obviously private sector banks. That continues to be there, but in a broader sell-off, which the kind of sell-off that we saw yesterday or which we're seeing right now, you would probably see some of these larger names which have contributed largely to the rally being sold off more aggressively than either the PSU banks or other private banks like ICICI Axis. So I think at this time, at the first sign of weakness, you'll probably see HDFC Bank, Kotak and others being sold off to take profit for a round of profit booking, given that they were large contributors to the move as well.
Interesting. The movement in IT today, what do you make of it?
Yeah. So IT, as a sector, I think we've been cautious on the sector. We've between the previous quarter to this quarter, you've seen obviously the INR appreciate, so that has its bearing on the margins. I think the bigger worry on IT sector right now is the fact that growth concerns are surfacing across the globe. So if you look at PMI data which has come through from various markets, that's been fairly disappointing. You saw German institutes, downgrade the growth estimates across EU today. So I think that's, the slowdown in the overall growth, that's what is impacting IT. There was an opinion that IT is probably a safe haven to hide, but the fact is that given that it has headwinds from both growth concerns in developed market as well as concerns around the rupee, I think that's where the problem is, and that's what you're seeing the sector being under pressure today.
What happens to the other rupee-sensitive pockets, like pharma, for one, which had seen that big up move coming in at the time that the rupee had started to depreciate, and the oil and gas pack?
I think on the pharma side, very clearly, it's a catch-up trade. Our sense is that given where the index has reached, so to say, the market was beginning to get overheated at this point in time. The next leg in the stock on a stock-specific move or as index constituents would have happened on the laggards, and pharma and auto were two sectors which we were calling out to play catch up to the overall index rally, and I think that's pretty much what is happening on the pharma side. It's not so much to do with the rupee, with the rupee appreciation and the fact that that impacts the margins. It's just purely a catch up rally on the underperformance on the sector per se, and that's what we are also seeing with the auto back.
Okay. Do you think that the recent uptick or recovery that we've seen in some of the quality names in the rate sensitive pack could well continue? I mean, one, HDFC today logs in a market cap of what, 3.5 and trading new highs. Bajaj Finance eclipsed 3,100 as well, and lo behold, while the other auto stocks have struggled the last 3 or 4 days, Maruti's come back with a bang too, despite the numbers were largely in line. Showed, so to my mind, somehow it showed some drift towards the larger names and the quality names with time-tested models. From a trade perspective, or from a slightly medium-term trade perspective as well, what do the positions in some of these stocks indicate, Tushar? How would you approach them?
So a lot of these stocks, not so much Bajaj Finance, I would say, but some of the others like HDFC, Maruti, Hero Motor, for that example, I think as another name. These are names which are high quality, but given the overall sectoral problems there, you had seen a fair bit of shorting in the names. I think over the last 2 days, we have seen some amount of short covering happening in names like Maruti. Today it's the Hero Motors turn and HDFC's turn, and I think that's what the trend is. My sense is that if the markets, my overall sense on the markets is that they are going to be cautious. We, in this leg of, in this, time of the market, we could probably see, markets get back to about, let's say, the 10,500, 11,500, 11,550 odd levels. And in that process, you will probably not see these stocks bounce back significantly higher. So the price action in these stocks was driven by some amount of value buying and short covering, but I would say that Maruti would probably make a move at max till about 7,300, 7,350. Hero HDFC could probably get to about the 2,100, 2,120 odd levels, and Hero Motor probably around the 2,800 odd levels. So that 2,750, 2,770 odd levels. So in the first leg of the market moving down, yes, they could see some kind of outperformance from these names, quality beaten down names, like you say, driven by both value buying and short covering. But is that something you could see like a 10% outperformance to broader markets? I don't think so.
The leg down, Tushar, and we've probably staring at it already because the last 2 or 3 sessions, the markets have looked more nervous than confident. The leg down, how steep can it be and how swift can it be?
Swift, it could be fairly swift. I think, frankly speaking, if you look at the entire March move was driven by foreign-led buying. And there was a period of time within March where you were almost on a daily basis seeing foreign buying in the range of 1,500 to 200 crores on a daily basis. Yesterday was the first day that we, after, so I think 25th March was one day where we saw some kind of foreign selling. The market was down over 1% on that day, and then yesterday again we saw over 1,000 crore, 1,100, almost 1,100 crores of foreign selling, and you saw the markets kind of correct almost 70 bips on the day, and significantly from the highs of the day. So my sense is that given the overall depth in the market, if there is any sign of a sustained reversal of foreign flows, the sell-off could be fairly swift. Purely from technical levels and from a market positioning levels, etc. At this point in time, the most open interest concentration is around the 11,000 odd levels on the monthly expiry, on the 11,000 level. So I don't think that's a level which we are coming at, but we are very closely watching the 11,500 level on the Nifty, because that was one level which took a while for the Nifty to cross. So I think this leg down could be fairly swift in coming to the 11,500 levels, and then we see how things pan out after there. But my honest submission is that we need to kind of keep a very, very close track on foreign inflows, because they were the primary factor driving the move in the month of March.
as we speak, the bank Nifty is now sub 30,000 at 29,897, and it's losing steam pretty quickly. That's the lowest point of the day for the Nifty bank now, almost 200 points under, and that's having its pressure building up on the benchmark index itself, which is now down under 11,600. So 71 points given up on the Nifty, 11,571. Tushar, are you tracking any of these housing finance companies? We've just got the Q4 update from Indiabulls Housing Finance talking about PAT growth guidance of about 17 to 19%, good enough cash on the books, borrowing plans back to cater to growth in a big way. Would it be the turn of the page for some of these companies?
So, sorry, I didn't get what you asked. Which
housing finance companies?
Housing finance companies, yeah. So I think there clearly is value from price points, given the kind of correction that you've seen, and I don't know, whether you want to bucket that in the same league as in HDFC, but we've seen a fairly sharp move in Indiabulls Housing, for example, today. So housing finance companies, I think they do benefit from this entire rate cut, and it's probably a sentimental trade which is happening there, and obviously some kind of catch up. We are not too far from the numbers coming out. I think Indiabulls probably reports in the next 10 days or so, and growth guidance from these companies is going to be very, very closely watched out for. So at this point in time, I don't think the trade is on the short side in these housing finance companies. Given that there could be a reasonable amount of a short cover trap for these names.
All right. So what, according to you, Tushar, is more of a conviction trade at your end? Within the broader market space, be it any of the large cap names within the index itself?
I think the large cap index, you saw the kind of foreign flow which came into India in March. You saw that happening in a very select set of names, and if that flow is reversing, you'll probably see the same set of names which will correct. So as a result, I would look at names like Reliance Industries, Kotak, IndusInd Bank as well, for that matter. All the IT names, so to say. I think clearly quality large cap names, index heavyweights, they would be the ones who would drive the leg down, and you would probably see mid caps outperform in this leg of the fall if it comes back to about the 11,500 levels.
All right, we leave it at that, Tushar. Thank you so very much for joining us this afternoon and sharing your thoughts with us on the show. A quick market opinion coming in there from Tushar Mahajan. Moving on, FY19 was not a good year for Vedanta. The company's copper smelter in India was shut down after protests in Tuticorin impacting its total production. But it wasn't just limited to that one. Production line, the steel through oil and gas majors, failed to meet most of its targets through the year itself. Nikki Mirchandani is here to put things into context for us. Nikki, good afternoon.
Hi Devina. Well, typically if you look at the numbers, production numbers, there is a disappointment creeping in importantly from two key divisions. That is the first, Zinc India division, which occupies around 49% of your overall EBITDA for Vedanta on consolidated basis, and the oil and gas division, which forms around 22% of the EBITDA. However, the company has reported in line of set of numbers for alumina and aluminium division, and it has clocked in better than expected performance for iron ore and steel division. Let's get on to the Zinc India business first, where the contribution to their overall EBITDA stands at around 49% as of FY18. The company had guided for the number which was greater than FY18, but then managed to actually register a decline of 12% in FY19. This is importantly on account of persisting geotechnical issues at one of its Agucha plant in Q4 FY19. Also in terms of the international business, Corpin division saw saw the strike there, which impacted the production numbers. So India as well as the international business, the zinc as a whole for Vedanta did not augur well and is expected to weigh down on the financials of the company. In terms of the oil and gas division, this has been a miss year-on-year basis for the company as such. For FY19, just to speak about a 22% contribution that the division contributes in terms of FY18 numbers, the guidance was for a growth of around 8 to 18%. That was the kind of growth we were expecting for FY19. The company has actually just managed to register a growth of around 2%. So clearly, there is a disappointment creeping in on account of natural gas decline, particularly in Rajasthan, which has led to lower production rate. However, if you look at the power division, though it's not a part of the chart here, 74% was the PAF which was clocked in the previous year. It was expected that this time around the PAF is going to be around that 80% kind of level, but then the company gone ahead and clocked a 88% kind of level. So improved performance in terms of power division, iron ore division and steel division too continues to contribute well for Vedanta. In terms of stock price, the financial year FY19 has been typically the worst one that we've seen since FY16 on account of major issues surrounding across the corporate governance policy of the company. But today in trade, the stock is up as much as 0.5%.
All right, Nikki, thanks very much for that. So Vedanta remains in focus there. Morgan Stanley has come out with a note on Amara Raja batteries. The note comes a day after the battery maker terminated its contract with Johnson Controls. Yatin Mota joins in with more details. Yatin.
Afternoon, Devina. More importantly, we have a whole host of brokerages that have come out with a note on Amara Raja. Morgan Stanley spoke with Johnson Controls, and that is the reason why there is more detailed note coming up. In fact, post this event, Morgan Stanley still maintains overweight on the stock with a target price of 1,065. They say that they spoke with Johnson Controls, which clarified that the stake in Amara Raja batteries would go to Brookfield. Remember, we have Johnson Controls, which divested its power solutions business to Brookfield and other private equity players, and the deal is expected to get concluded soon. Yesterday they sold 2%, Johnson Controls sold 2% to the promoter family, which is the Gala family, and the questions were really what happens to the remaining 24%, on which Johnson Controls clarified to Morgan Stanley that this would be eventually transferred to Brookfield. Morgan Stanley does not expect any further sell down by Brookfield anytime soon, and they say that the new investor, which is Brookfield, would like to create value first before exiting any kind of investments in Amara Raja battery. So because of that, we have some positive comments coming in from Morgan Stanley on Amara Raja.
Okay, and Goldman Sachs has come out with a very bullish note on TVS Motors after the investor day that they had. Yatin, you want to fill us in on that?
So Neeraj, historically we have Goldman Sachs, which was bullish on TVS Motors. So the stance or the rating remains the same. In fact, they have maintained a buy with a target price of 728. No changes there. They say in the note that the remarkable growth will continue, and they expect a 25% EBITDA compounded annual growth rate till FY21. So for the next 2 financial years, Goldman does believe a 25% compounded annual growth is possible there on earnings front. They do see solid volume growth prospects, and also more importantly, the impeccable track record of new launches bodes well. Of course, the management also told analysts yesterday on their investor day that the share of scooters in the overall volumes will be probably 40-45%. That is also one segment wherein TVS has been able to successfully take up the market and garner some market share.
Okay. Yatin, thanks so much for putting that into perspective. Speaking of TVS Motors, I remember a conversation last time when the numbers came out, and Dipan Mehta was with us. Coincidentally, he's our fundamental guest as well. Joins us right now on the show. Dipan, good having you. Thanks much for joining in. We'll come to the market opinion as well. But I remember our conversation the last time wherein you mentioned that you thought that TVS Motors, the results were a game changer when they came out with the quarterly numbers the last time. Their investor day and the brokerage reactions post that also seems to suggest that there is more bullishness than bearishness. What did you make of what they told the investors at the investors day meet?
See, you are not present for the investor day, so I cannot comment on it. But my reading of TVS Motors is that it is quite a unique two-wheeler company. For one, it is present across the entire spectrum of 2- and 3-wheeler product range. So they have a product for every segment and sub-segment. Secondly, they are present also in the export market, and within the South they have a dominant position with adequate scope to increase their geographical presence and distribution, and therefore volumes in the non-South region as well. Their products also have been very successful with great deal of consistency, and the only negative for TVS Motors is that its operating profit margins are amongst the lowest in the industry, and that's where the management is focusing on to try and improve the operating profit margin. So there's scope for improvement over there, and as and when they do that, you will see the earnings also move up. But most importantly, what we like best is the diversified product offering, which acts as a bit of a hedge in the entire portfolio, because if some segment within the two-wheeler is down, then other segments try and make up for that shortfall. And by and large, they have had industry-beating kind of volume growth rates. They've been able to maintain and slightly increase their volume growth despite the onslaught which has come in the last few years from Honda Motor and Cycle, the motorcycle that they have launched. So very positive on TVS Motors per se, and investors have a slightly longer term outlook, like 2 to 3 years or so. I think that TVS Motors will give at least better returns than its peer group, with the exception of, say, Eicher Motors, where we have an absolute overweight type of a view.
Okay, Deepan, stay on. Just some flashes on your screen. There's a Bloomberg exclusive. Yes Bank is set to consider, I would reckon, a QIP, but an institutional share plan, $500 million, in order to raise some monies to bolster capital base and expand lending. And I bring up the intraday of Yes Bank if we can. I don't think this news really materially dents the stock price. If anything, for the capital injection at maybe a better price would only augur well. But this is an interesting piece of news, and it's a sizable number that we're talking about. $500 million is a fairly reasonable amount for the bank to raise as well. 2.5% lower in the session today, but this is interesting. We don't have the timelines as yet. The flashes don't quite say that. Maybe the whole story would say that, but there's an interesting exclusive that has come in from Bloomberg. We'll talk about that.
Interestingly, because, you know, for Yes Bank, the concerns were around what they will do with regards to capital raising and how they would go about to funding their future growth plans. I mean, that obviously was a major concern, and now with this coming about, maybe that eases that out a little bit. Though the stock price has not reacted much, but you know, when the whole issue came about and when Ravneet Gill took over, it was something that people were talking about. Just now, probably there will be a way forward with regards to what they do with capital raising.
Yeah, let's wait and watch. Maybe we'll try and get in the person who's broken the story in a bit as well. But for now, that stock remains in focus too. Let's talk about the markets at large with all our experts. Start off, as we usually do, with some trade opinion. Abhijit Pathak of Definite Solutions with us on the show. And Brijesh Singh of Stock Access as well joining in. Abhijit, good having you. Good afternoon. You've been active on Twitter the last 24 hours with the movement in the markets and what's been happening in the run-up to the policy. Post-policy now, now that the markets look like doing what they did yesterday, which is correct, what's your near-term stance?
Yeah, I think there is going to be a pause in the up move which we saw, and unfortunately it made a double top. So of course it's a double top because the levels were the same, but then it is not a double top technically unless it breaks previous lows, which is previous supports, which is near 11,500. So as long as 11,500 holds, it can remain sideways between the 11,500 and 11,750. So it might be sideways for a few days between these two levels. So the trade would be to go short in a 11,700 straddle. Right now it is at around 300 rupees, and that can give some good results in the next couple of days.
So you're not shorting right now. You would short the Nifty if you would on any signs of an up move, right?
Yes, short on rise, I agree, but again buy near the supports near 11,550 with the stop loss below 11,500.
And would that stance be similar on the Nifty Bank, because that is the one that has looked slightly more vulnerable in the last 3 or 4 sessions, Abhijit?
Yeah, Bank Nifty, I'll be looking at 29,800 on the futures. If that goes, then that will be weak. So till again, as long as 29,800 is held, it can move. Again, I'm not looking at a very big rise. It can just move up under 300, 400 points and remain sideways like Nifty.
Okay. Brijesh, would you go short on the Bank Nifty at the current levels? The futures rate, I reckon, somewhere around 30,000, 100, 200 or thereabouts. What's your stance on the Nifty Bank?
Say no doubt, Bank Nifty right now, if I take a spot value, it has a support at 29,700 to 29,750, and it's been trading somewhere at 29,840. So it's hardly a 150 point. Anyhow, 29,500 has a strong support also. So would be a contra bet if someone wants to go for a long side. So somewhere around 29,700 or say 29,750, one can take a buy call rather than going short, because it's near that support from where we have seen a bounce back with a strict stop loss of 29,500 and play for the target of 30,100 or say even 30,200.
Okay, so if that is indeed the stance, what about specific stocks? Abhijit, I'll come to you first. Or yeah, what are the stocks that you're recommending in the session today, Abhijit?
Although I'm saying Nifty is weak, but it's at the lower side of the range. So I had talked about a short in Reliance, but it has already come down quite a bit. And even if it rises, I don't expect it to cross 1400 easily. And I would expect it to go towards 1320, 1330 first. So it is a short on rise with a stop loss above 1390. And two stocks which are still looking good is Tata Steel with a support of 520, 525. So that can be bought on dip. It can go towards 545, 555. And DLF with a stop loss of 197. In fact, it can be bought right now. It can go towards 210, 220.
Rajesh, what about your Nifty call?
See, Nifty, I've been looking at an hourly chart. So previous swing low was somewhere 11,400. So I'm assuming that level should be holding, and the trend decider from that would be 11,225 mark. If that thing is broken, then we can see a correction. Right now, what I've been looking is that we had touched all the way to the all-time top of 11,760. We are seeing a profit booking. So at this juncture of say 11,568, I was been assuming that 11,550 should hold on. So anyhow, we can revise our stop loss. If anyhow Nifty trades in the somewhere around 11,500, with taking 11,400 as stop loss, we can look a Nifty going back to the level of 11,700 or even 11,760 can be achieved. The time frame for this to hold this call would be somewhere around 2 to 3 trading session.
Okay, some of your stock ideas. We'll start off with the sale first, where you're buying the counter. And Arvind, you've put a target of 104 on this one.
See, Devina, with the Steel Authority of India, the stock has been bouncing back from a level of 44 rupees marks, and the previous swings highs were been a resistance. So 48 followed by 53, now 56 was been acting as a resistance. It has been crossed with increase in volume. So shorter term time frame of the chart are suggesting the higher tops and higher bottom formation. So recent swing low of somewhere around 56 can be kept as a stop loss and play for the target of 62 to 63. Whereas the Arvind has been concerned, the shorter term time frame as well as the daily charts, the stock had made the high lows formation, which is giving a bullish view. So somewhere around the present rate of 91 or say 92, the stock has been quoting. The recent swing low of 89 can be kept as a stop loss, and we can play for the target of 102 to 104 juncture. The time frame to hold this counter would be 2 weeks. Regarding the sale, I am looking within a 1 week we should try to achieve a level of 62 to 63.
All right, good pickup in Tata Motors though. The stock right now at 205 is actually the top gainer on the index. So you have seen the stock moving up and has stayed at the high point of the day. Right now, volumes have also picked up. In the last 7 days, actually, Tata Motors has gained closer to 18.5%. So good going for that one. Indiabulls Housing in the last 7 days has been up 21%. Rajesh, both of these names, Tata Motors for one and Indiabulls Housing at 886.
If I talk about Tata Motors previous swing low was somewhere around 180, and we have seen that thing crossing very easily, and the stock had moved up. Now, if someone wants to play for a long side at this juncture, the risk reward ratio would not be in the favor. What I am been assuming, anything below 200, one can take a buy call and end with stop loss of 180 or say 185. And play for the target of somewhere around 225 followed by 235. Anyhow, 235 has been crossed. The stock would be coming out from the bearish zone of a longer term time frame, and then we can see the stock jumping to the level of say 300 or 320 in a year time frame. Regarding with the Indiabull Housing Finance has been concerned, the stock on a daily chart as well as on the weekly chart has been moving up from a level of 600 odd level. Right now the stock has been quoting somewhere around 888. It has a support at 800 followed by 840 band. So if someone is looking for a buying at this juncture, little bit I would be avoiding, because the recent if we take a target projection somewhere around 920 to 925 would be the ideal target, whether or we can say a resistance on where the supply would be coming. So at this juncture I would be avoiding, but if it trades somewhere around 870 to 875, one can take a buy call in it with a stop loss of 840 and play for the target of 920 to 925. Any closing about 925, the stock can jump to the level of 990 also.
Lakshmi Vilas Bank, that stock's been on a tear yet again. The stock's up about 5% at 88.5 now. It's gotten up 39% in the last 7 days of trade. So upper circuit after upper circuit for this one in the last 7 days, and the kind of gains that this one has seen has been phenomenal. 6.5 million shares being traded in today's session as well. Abhijit, are you tracking a Lakshmi Vilas Bank at all?
No, sorry, unfortunately I don't track it.
Any other PSU bank that you feel is worth a trade?
Actually, all the PSU banks are still looking good on charts, but they might correct maybe about 3 to 5, 7% from here. But they are still, all stocks like Union Bank, PNB, Oriental, all these are buying on dips, but not at this stage because they have run up quite a bit. So let them cool down maybe over the next 1 week or so, and then they might reach some buying levels, maybe 3 to 5% lower than these levels.
Dipan, come back to the talk of the markets at large. Banks have been leading this pack of weakness. What's your stance here? Do you think that the run-up was too swift, too soon, and maybe we can see a bit of a pullback? And combine that with what's your view on the PSU banks as well?
See, we have a very positive outlook on the banks, PSU banks for short to medium term and private sector banks over the longer term, and we are quite positive on NBFCs also. And a lot of the tier 2, tier 3 banks, NBFCs have had a significant correction, and now we are seeing a swift turnaround. See, these kind of volatility and sell-offs will take place from time to time because investors and traders are kind of have a heavy weightage within their portfolio for these stocks. But the long-term trajectory for the banking industry in India is excellent. It's one of those few industries where you can see secular growth rates, and some very strong trends are emerging, first being lower credit costs across the board for the industry post whatever cleanup has been done under RBI diktat or through IBC. Second is that once interest rates start moving lower, we'll definitely see increase in volumes for all of these banks. And for the private sector banks and NBFCs, there is the additional charm that they will keep on gaining market share at the expense of the PSUs, and there are still quite a few weak PSU banks as well. So keeping this in mind, investors need to have a large portion of their investments in the banking stocks, and in fact corrections such as these are good opportunities to get into good quality banking stocks or even NBFCs. And depending upon the risk appetite, there is so much of choice available, right from a rather risk-free investment like Kotak HDFC to a higher risk investment like an Equitas or OG1 when it comes to banks. And the same thing is true in the NBFC space and the PSU as well. So you decide on your risk appetite, and the stock is available for which you want to invest in. And each of these stocks have their own risk return profile. The higher the risk, the higher probability of returns. And the lower the risk, the lower the chances of a return. So on the whole, I think it's one sector which investors need to have a very good handle on, and get into those 5 or 7 stocks which they feel will really be outperformers, and rate them based on their own personal risk profile.
All right, some news regarding Z, and looks like the Ambani and Mittal are set to weigh in bids for Z's stake, 2.5% higher. Not a very big move, but nonetheless, this is going to keep the stock active. Remember, we've been talking about how the promoters have been slowly moving out of Z in bits and pieces over a period of time over the last few months, and we've seen one incident of that taking center stage just a few days ago, which did not really go down too well with the markets, and you saw the Z stock coming off quite significantly when the news actually came out with regards to the promoters. 0.8% stake it was, not a big amount, but it still didn't go down too well. Obviously, mutual fund sources that we spoke to and got information from suggested that there is no change of stance from their end, and this could probably be a little bit of, to meet the most immediate liabilities and requirements for the company, that they've been doing this.
Yeah, indeed, but this should be a shot in the arm. Dipan, what do you make of this long anticipated? Now, the Bloomberg correspondent saying that both Ambani and Mittal are said to be weighing in bids for the Z stake. Would the near-term future for Z, and I think the news is also that Bharti Airtel has already started due diligence for this piece. So would the near-term future for Z Entertainment hinge on a pricing at which this would be done, or just a Bharti or an Ambani or anyone else coming in, even at a slightly lower price, would augur well for shareholding, because that bogey of the agreement and shares coming out in the market, etc., will all go away?
See, it's still very hazy as to how this deal will emerge. So Z doesn't want, the promoters of Z do not want to exit Z Entertainment completely. They want a strategic partner, an equal partner, and how this partnership will work needs to be seen, because you cannot have two owners in a dynamic industry like a media industry. You need to have strong leadership and strong plan and strategy, and it has to be driven by individuals who are extremely talented and have a good knowledge about how the overall technology trends within the sector, because clearly media is one sector which is undergoing a great deal of disruption. Now you see an industry where there is high degree of disruption and opportunity as well, and then you have two owners, and what will be their working relationship, that needs to be seen. So I would say just wait a while in Z, and let's understand how this is all going to actually play out, and who is eventually going to be calling the shots at the post such a strategic corporate action which is anticipated, and then look at the stock and then see how its prospects are, and how the functioning will be, and how they will be able to navigate all the various challenges which the industry is facing, especially from OTT players, and overall drop in broadband costs, which is also going to impact these companies. So I would say just wait a while, and let's understand how the deal and the post the deal scenario is, and then perhaps take a more informed view as to what these prospects are and whether it's still worth buying into the stock.
Remember, just adding on to that, the deliberations are preliminary and may actually not lead to a transaction. Some more information coming in there. Reliance Jio, Infocom and Bharti Airtel expected to make the bid for Z's stake. The stock though has come off from the highs. It's up about 2.3% right now, 414 for Z, come off from the day's high of 420, in fact 417 that it was trading at just a few minutes ago. The other stocks then to focus on are what's been happening within the entire telecom space. Bharti Airtel making a roadway of its own over the last few trading sessions, and the way that the stock has moved in the last 7 days of trade has gained about 8.5%. And on the flip side, Vodafone Idea doing the exact opposite. It's been on a continuous downtrend. In today's session, the stock's down 4%. In the last 7 days, the stock is down 48%. So pretty divergent moves coming in from within the same pocket. Dipan, within the telecom space right now, what would be the variables that you'll be watching out for closely?
Is that question for me?
Yeah.
I didn't get the last. We are talking about which sector?
The telecom space. Considering how Bharti Airtel has been moving over the last few days, 7 days, 8% up, but on the flip side, Vodafone Idea has been down 48% in the last 7 days.
Yeah, I think still it's a very mixed picture over there, and I'm not convinced about the sector's ability to get pricing discipline and grow the business in a sensible manner and get a decent return on investment. So I would just like to pass this sector completely. There are many other sectors. Banking and financial services are a great sector to be in. Another sector which is opening up quite well is engineering construction companies. They are sitting on huge order book position. Relatedly, capital goods companies also likes of L&T also are looking at good times. And overall, with the way RBI policy has come out and the shape of things to come, you're going to look at lower interest rates. So interest sensitive stocks could be realty, could be automobiles. Those also would come back into reckoning. So I would say it's better to play these themes like rising demand for retail credit, financialization of savings, interest sensitive stocks. I think those are better to play than something like telecom. And obviously there's the temptation to buy into a telecom stock considering that it has corrected so much and not participated in the upswing. But then I think going forward there is still so much of uncertainty, and you may have to look at many quarters of disappointing performance. In the meantime, other sectors may do really well going forward. So it's better to be in the performing sectors than some sector which has got so much of uncertainty around its prospects going forward.
Okay, let's talk about some stocks in news. Two exclusives being broken by Bloomberg in the last 20 minutes of trade. Let's start off with the first one. Yes Bank said to be planning to raise about $500 million. The private lender, which recently got a new CEO, is said to have started talks with potential advisors. Anto Anthony of Bloomberg News joins us on the phone line with this. Anto, good news break. What are you learning?
That's right, Neeraj. Yes Bank management is talking with advisors to assess investor interest for a 500 million QIP. So the share sale could come anytime after the bank earnings, which is slated for the last week of the month. As we know, the new CEO, Ravneet Gill, had no options but to raise equity to sustain the pace of loan growth because the bank's Tier 1 capital ratio has already fallen to one of the lowest among top private sector banks in the country. So that is it as of now, and a formal mandate on bankers who will be managing the deal is expected next week.
Okay. And while we've gotten the stage of having advisors and bankers, is there any sense of by when or by what timelines are we looking at when the actual fundraising might happen, Anto?
So the fundraising can happen anytime after the March quarter earnings, which is slated for the later part of the month. So it could happen as early as May, before the election, if the market remains conducive. No final decision is taken on the timing so far, though.
Okay.
And no indication of the pricing as well, I assume. All right, Anto, thanks very much for joining us. Really appreciate you taking out the time. That's some exclusive news coming in on Yes Bank. Remember, it's going to be an important quarter to watch out for as well, with the kind of numbers Yes Bank is most likely to post. And since the time Ravneet Gill took over the helm at Yes Bank, though the stock is really not doing anything much. 267, 268 is where it's trading at. It has not moved at all, even after this. All right, the other big story that we are tracking now is that of Z. Mukesh Ambani and Sunil Bharti Mittal's competition seems to have been moving beyond the telecom space. The two billionaires are set to be eyeing stake in Z. PR Sanjay of Bloomberg News is joining us now. He's got these details, exclusive details for us. Take us through them.
So, the game is not pure telecom for Bharti Airtel or Reliance Jio, for anyone that's the matter. So across the world, telecom operators are now trying to own content to get into the game, the next level. So Bharti Airtel's stance was earlier to outsource, and they used to give it to others who are good at making content. But now they're examining to change their stance so that they will have a better edge on, or they will be on the top of content as well, because that is a play which is really playing very strongly across by Jio in the telecom market, which is India's second largest mobile market. So Sony and Comcast are in the fray, but there are some disagreements in over valuation. It's stuck. So at this time, Indian telecom operators are getting into the fray, and they are also considering to submit a potential bid for Z so that they will have an edge on content. So the play is going to be a content, and that will be the play we will see across. And it is not, firm where what is the kind of valuation, what are they looking at, how much stake would be buying from C promoters. The discussions are on, and internal due diligence are progressing. And
so it's at a very nascent stage.
Very nascent stage.
Okay, just wondering, you mentioned that there is a differences from Sony and Comcast with the Z guys currently over valuation at which the deal could happen. Any thoughts on what is the potential valuation that we're talking about?
At this point of time, we spoke to 2-3 investment bankers about valuations. They're not revealing what is the kind of a valuation they would be looking at. There were various speculations, but they don't want to put a number across to it. And apparently now, promoters are also selling some stakes so that they could withstand the pressure put forth by lenders. So they are not actually putting across a number, and they are looking for the upside what the Comcast and Sony are offering now. Battle will be intensified when 2 leading Indian players coming to the play. Of course, Spectrum auction is around the corner, so Bharti would be struggling to get some more funding, but the players, as I told you, it will be content. So to get content, to get market share, at least 2% market share, if you get owned to the content, that will give you another edge. So to forget ownership of that, Indian players will not, they won't be a passive onlooker into this game.
It's interesting for Bharti because on one side you have the company trying to reduce debts on the book and trying to figure out its own way to make sure that they can get that war chest collector so that the debt can be brought down, and on the other hand they're looking to make inroads into this particular space.
You need to survive in this market which is where the competition is cutthroat.
It certainly is. Sanjay, great story. Thanks so much, and keep us updated as and when you learn more. I'm sure you will.
Sure.
But yeah, the news flashing on your screens, on the terminals as well, and maybe some bidding wars for that prized asset of Z, 20-25%, whatever the stake that they give out. Dipen, just one question, one follow-up before I thank you. And while you said that you won't look at telecom and you are avoiding that pact, would you classify Reliance in the same bucket as well? Because while it's got 3 large verticals now, telecom is arguably the largest. You could argue that retail and oil and gas remain, and at least oil and gas is a nice money-making business. Would you avoid Reliance as well, or would you believe that Reliance is an opportunity to invest into currently?
Oh, I think we have an underweight position in Reliance, and frankly, we've been going wrong on that particular call of ours. And our logic is that a lot of the value in Reliance is there on account of retail and telecom. And the biggest uncertainty in Reliance is how that value is going to get unlocked. And it can get unlocked in 2 ways. One is that they split Reliance Industries and minority shareholders get shares directly in Reliance Telecom as well as in the retail business. The other way is that they do the IPOs for Reliance Telecom and for Reliance Jio and for retail. If they were to do an IPO, then Reliance Industries becomes the holding company and they will have minority shareholders in the listed entities. And that's not very positive for minority shareholders of Reliance Industries, because then the holding company discount will come into play. And we have seen that such holding company discounts don't have a specific norm. They can be anywhere from 10% to 90% also. Like there are companies like Mahindra and Mahindra which are very valuable subsidiaries, but they don't get captured in the valuation of Mahindra and Mahindra. That was just one example which comes to mind. Another is HDFC also, which has got very valuable subsidiaries and strategic holdings. But then it's a bit of a doubt as to how much of those subsidiaries and strategic holdings are getting priced into HDFC Main, that stock. So if it's going to be an IPO, then it's going to be a big disappointment for Reliance shares and the stock price per se. But if there's going to be a split in the company, then that certainly will benefit Reliance minority shareholders, and maybe you could see the stock price moving up even from these levels. Because whenever there is such a corporate action, and we have seen Reliance Industries itself, when they split the company and got shares of Reliance Telecom and Reliance Infra, and that entire kind of corporate action and reorganization which took place several years ago, that unlocked a lot of value in Reliance Industries at that point of time. So what the thinking of the management is going to play an extremely important role in the stock price valuation over the next 6 to 12 months or so. And that is the big uncertainty as far as Reliance is concerned. And so far, I think we've not heard any indication from the company as to which way they are going to seek to unlock the businesses that they have created. And that's the real reason why we want to remain a bit underweight or slightly neutral on Reliance Industries. Also, the stock price has run up significantly, and conventional wisdom is that you won't want to buy after a rally has taken place of this magnitude, and it's a large company, so there's going to be a limit as to how much it can keep on growing because base effects will also come into play. And last point, if I may just make over here, is that the traditional businesses, the core businesses of refining and petrochemicals, they are cyclical businesses, and you could have a lot of upsides and downsides over there. And they've had a very positive upcycle as far as petrochemical is concerned, and that has taken care of the down cycle playing out in the refining business. But you could easily have a scenario where both these businesses are facing stress, and then you could have overall numbers also be a bit disappointing going forward. So too many moving parts in Reliance Industries, and given what the valuations are, given that it has moved up so much, I think it's best to avoid it.
All right, got that, Dipan. Thanks so very much for joining in and sharing your thoughts here this afternoon with us.
Thank you.
Markets for themselves not doing a whole lot much. In fact, it seems to have worsened a little bit more for the Nifty Bank, which is down about 0.7% right now. A marginal pickup from the lows of the day, though the Nifty has actually seen a 20-point bump up from the lows of the day. We're going to take a very short break right here on Countdown. On the other side, we'll get you the Fab Food stocks of the day, and at 3:15 we'll get you what dealing rooms are recommending.
Right here on Bloomberg Quint, shot in the arm for some stocks, must point them out. Orient Cement, maybe it was up throughout the trading day, but it just caught my eye right now. 8.5% higher for that stock, so pull up that chart. It's up about, it's doing very well. The other one, and which has had a remarkable move, is Interglobe Aviation, up about 5%, 1431 and counting. So Indigo is doing very well for itself in the session today. Back with a bang of sorts. And of course, Zee Entertainment at 416 now, so it's nearing the day's highs of 420, up about 3%, but in and around the highest point of the day right now for Zee Entertainment. So 2 or 3 names which stand out in trade at the current point of time. The world markets, well, not too bad. Just pull up Europe and see what that is doing. Pull up the Dow futures and show you what's happening there. A bit of a quiet session of sorts, so the FTSE is correct about 0.5%, and the Dow futures will come up on your screen for just a moment. They too are marginally off, so very, very quiet, the Dow futures too right now. World markets not all that supportive. Before we talk about some of these active names with our technical experts, get in Yash Upadhyay, who joins in with the Fab 4 list of the day. Yash, good afternoon. What's made to your list?
Good afternoon, Neeraj. It was a tricky day today given the kind of move that we've seen on the index, but nevertheless, Tata Motors is the top stock on my list, and that is after on the back of strong JLR sales numbers that have come in for the month of March. We saw a 20% increase in its total Jaguar sales for the month of March, coming in at about 8,100 units. So that is positive. SRF is up about 4%. This is after the company received a no clearance letter from the Gujarat Pollution Control Board days before which it had received an order shutting down all of its operations. So that is a key positive for the company. Zee Entertainment, on the back of the recent news from Bloomberg, wherein it says that Mukesh Ambani and Sunil Mittal both are likely to weigh in bids to acquire the company, has moved up on the back of that news piece, up about 3% odd. And lastly, I want to highlight Interglobe Aviation. It's up about 5% in today's day of trade, with high open interest build-up of more than 11%, which indicates that most traders, they are taking long positions in the counter. Back to you.
Right, Yash. Thanks very much for that. That's the Fab for stocks of the day. Mayuresh Joshi of Angel Broking is joining us on the show right now. Mayuresh, good afternoon to you. Yesterday and today both seem to be days of profit taking on the index after hitting that record high for just a brief moment that we've seen in yesterday morning session. But two stocks that I want to talk about, both Bloomberg exclusive, one being on Zee, where there is interest coming in from Mukesh Ambani as well as Bharti Airtel for a stake pickup. The stock actually is starting to move up now, and the other one being Yes Bank, and they're looking to do a share sale to raise 500 million.
Afternoon, Devina. So, I think the stocks have probably been in the news, but I think let there be some amount of authentication probably expected to come through. So, I think the element in terms of what might happen as a suitable partner coming through, I think one really needs to gauge who actually is going to come, and that actually will depend only on the factual events actually coming true. When you're probably talking about a stock like Yes Bank and the need for raising capital, I think the three main aspects that were plaguing the stock, I think two of the aspects probably have got covered in terms of the new management coming through and the new CEO appointed, which has got very well accepted by the markets. The second element obviously was a divergence, which again was given a huge thumbs up because of the nil divergence reported. And the third obviously was the need to raise capital, because balance sheet expansion, if they're expected to grow beyond 22-25% raising capital is a must. So in my opinion, again, I think whatever modes are taken through from the bank's perspective, it should be accretive from a longer term book value perspective. So maintain a positive view on Yes Bank with a clear disclaimer view on the stock in our funds.
Mayuresh, just stay on. So many other stocks to talk about as well, but as I said, some active names in the last few minutes, and would want to get our opinion of our technical guests. Since we're talking of Z, let's start off with that first. Abhijit Pathak, 416, 417, trading 3% higher after multiple days of weakness. Can it do more?
Yeah, it can go do more maybe, but the only problem is it needs to cross 450. If it closes above 450 on any 440 in cash, then it can go much higher, maybe even towards 460, but 440 remains a resistance.
But a 440 is still about 24 points away. What if somebody wants to play that? Is it advisable to initiate a fresh long right now?
Yeah, again, fresh long, the stop loss will be today's low, so that's also far off. So that's going to be a bit of a high risk trade.
Okay, so high risk trade, so maybe avoid that. The other one is Interglobe Aviation and Orient Cement. So I'll come to you, Abhijit, on Interglobe Aviation, 4.5% higher. What does one do here?
Yeah, you can hold that, but there is a resistance near 1460, which was the previous high. So, and if it crosses 1460, 1470, then it can go much higher, maybe even towards 1550.
Okay. And Brijesh, to you on Orient Cement, how is that one looking? It's the top gainer on the Nifty 500 currently.
Neeraj, one can take a buy call on it since the stock on a daily chart had made a higher lows formation, followed by today's there is a volume breakout by, if we take the average volume of say 20 days. So we have seen that. So at the present juncture also someone wants to play at 92, one can take a buy call with a strict stop loss of 85 and play for the target of 102 followed by 109. So 109 I am thinking can be achieved in a month time frame, and say for a week time frame or say for 2 weeks I am looking stock touching 102 level.
Well, looking strong certainly for Orient Cement. Selectively, some of the cement names have done well for themselves. SRF is the other one, up about 4% in trade, 2477 for itself. Mayuresh, comment on this one. When the adverse news came in, the stock didn't correct as much. It corrected intraday and then bounced back. This resumption of the plant unit has led to a 4% up move on the stock though. What's the outlook on SRF now fundamentally?
So afternoon, Neeraj. I think when the first piece of news did come through, I think there was every bit of expectation that there might be a very short-term resolution about the matter. And again, I think when you're probably hearing this news, I think the negative built-up that would have probably surrounded the stock, I think those concerns are probably getting washed off. Now, when you're probably talking about the core factors at play here, the EBITDA margins, both in the technical textiles division for SRF, did see a contraction in the quarter gone by. Also, I think the inventory loss that you probably saw in the packaging film business, I think this was something that affected both the EBIT and the bottom line performance as well. The third element obviously is the raw material inflation, which was very, very high, but that again is cooling off. So both caprolactam prices as well as MEG prices have come off significantly, and that does act as a relief both in terms of the technical textile business as well as the packaging business. When it probably comes to the specialty chemicals and the capex thereof, I think the capex is in the right direction for the company at this point of time. The EBITDA margins at 16.9 reported last quarter. I think there should be signs of stability going forward and a gradual improvement as the input costs start cooling off. So the expectations in terms of most of their business divisions doing well, I think that should very well continue and have a strong bearing on earnings. And even within the packaging part, I think they're probably into the BOPET film part, which is not affected as much as demand-supply dynamics affects the BOP part of the packaging film business. One might argue that valuations probably on the higher side with the run-up that we've seen. But again, I think numbers probably should start appearing far more stable and better over the next few quarters. So it's a clear hold from my side with a clear disclaimer. We own this stock in our funds.
Okay. Before we move on and get in a dealing room check, I just want to quickly get in a chart check going on Amara Raja batteries. The stock in 2 days has seen some steep cuts coming in there. In the morning session, the stock opened higher, after which I think it fell down closer to 4.5%, and now once again is seeing some bit of a bounce back. So 679 on Amara Raja. This week itself is down about 6%. Abhijit, Amara Raja batteries?
Actually, it is giving a bounce, but I'm not sure with the kind of news which came yesterday. So if someone wants to take a chance, maybe with yesterday's low as a stop loss, one can take a risk, which is below 640, 650. And right now it is showing some signs of maybe going up. So that can be a good bet, but the stop loss is a bit far off.
Okay, got that. It's now to get into what dealing rooms are saying and recommending this afternoon. Yatin Motor and Darshan Mehta, both of them here with their channel checks. Darshan, let's start with you first.
Yeah, so Devina, the first stock that dealers are talking about is Hero MotoCorp. Today, it's managed to move up almost 2.5%. Over the past few days, we've seen heavy selling pressure. Dealers indicate that majority of the selling got absorbed. So there will be more stabilization and a little bit of price accumulation that will happen on Hero MotoCorp. Decent volumes today, almost 1.9 million shares have already been traded. The second one is SRF. It's up almost 4%. Steady rise in trade today. Obviously, news coming in today morning that the Dahej plant is now open. Dealers indicate that the momentum will continue. All the negative news has now been priced in, and there is accumulation that's happening again at record highs. And the last one is IRB Infra, which is down 3%. Dealers indicate that some of the domestic funds have been sellers in today's trade. But Yatin, what do you have?
Darshan, auto stocks, and after the noise which is there in the last few days and the correction, downgrade reports, from everywhere, auto stocks were correcting and bleeding. But today we have some, FI buying happening in stocks. Eicher Motors, that stock has bounced nearly 600 rupees from the day's low. Maruti also has witnessed some, long build-up in the future and option segment. So auto stocks in particular is something wherein dealers do indicate there is a lot of FI interest at this point in time. Apart from these two auto stocks, TCS is one stock in focus, wherein dealers do indicate that HNI desks are sellers in IT stocks, especially the likes of TCS. And finally, Exide is one stock. And based on FNO trends, dealers are recommending a buy today, sell tomorrow. Remember, its closest peer, Amara Raja Batteries, has been under pressure. And, post the sell-off, we have seen there, some change in hands happening in the, sector leaders.
Well, interesting. The list of names out there. Yatin, Darshan, thanks so much for putting all of those into perspective. Z Entertainment is now closing in at the highest point of the day. I would reckon the other star of the last few days trading has to be Indiabulls Housing Finance with that 3.5% uptick. So that too is doing well. We spoke about some of these names and a few others with experts throughout the day today. Let's hear out what Harsha Upadhyay of Kotak AMC had to tell us about the impact of the RBI rate cut on markets, his expectations ahead of the earnings season as well.
As far as equity markets are concerned, for the past several weeks, because of higher liquidity as well as better sentiments, we have seen markets moving up. I don't think RBI policy would really be another trigger for the move to continue because most of the consensus expects 25 basis points of a rate cut this time around, and we think that's already priced in. And the market should not really make a big move because of the policy as such.
Okay. Asha, what's the call though on the index at large, and divergent views coming in on whether we are overvalued or fairly valued, looking at the cycle that we are in. Rhythm yesterday was making a point that don't look at PE multiples for India because earnings haven't been trending. So if you look at price to book, I think we are still at the median and not really at the expensive end. So multiple arguments coming in. Where are you on the argument right now? And should you have the option to sit on some bit of cash while we are at record highs ahead of the election volatility? Would you do that?
Depending on which valuation metrics you look at, you could see markets trading at either fair value or fair value plus kind of a zone. Definitely it's not very expensive or very attractive at this point of time. So to that extent, I think some of the expectations already capture some amount of earnings improvement that is likely to happen next year. And also there is a hope that there will be a stable government post-elections. So given these two assumptions, market has rallied on the back of enhanced liquidity, mainly coming from foreign investors. So to that extent, in the immediate short term, we really don't see too many triggers for the markets to really make sustainable higher levels. We believe that until the elections are over, it's going to be a narrow range with some choppiness at best. And later on, depending on how monsoon comes around and how earnings season is expected to behave, then you will have a direction in the market. But until then, it could be a narrow range.
So what are you factoring in with regards to earnings, this time around? And leaving aside the approach to the markets over the next few months, as we await the election results, for the entire year, if you have to take a constructive view in the market right now, what are the few factors that you're going to keep in mind?
I think clearly next year's earnings momentum is going to be driven by corporate banks, corporate lenders in that sense. There we are fairly confident that there will be revival in terms of earnings growth, and that would pull up overall Nifty, Sensex, or whichever basket that you look at. What is critical for next year would be there is a considerable slowdown that has happened in consumer-led sectors such as auto, consumer durables, and even FMCG of late. So whether that pocket is likely to meet analyst expectations or not will be critical for the entire Nifty basket or the market to deliver the earnings growth that everyone is expecting. If you go back to September quarter, where there was no NBFC-led slowdown for some of these sectors, the basket really grew at about 15-16% in terms of earnings growth on a year-on-year basis. If you expect that to happen in financial year 20, then obviously with the kind of strength that you would see in corporate-facing banks, you would reach closer to or to the levels of the analyst expectations in terms of financial year 2020 earnings, which is a significant 21% plus kind of an earnings growth. If there is a delay in terms of consumer-led sectors coming back to earnings momentum, then you would have issues even with corporate banks delivering better numbers. Then it will be difficult for the market to see that kind of an earnings growth. So to that extent, we are also positioned in sectors where there is a little bit of better visibility in terms of earnings. We are underweight on almost all of the consumer-led sectors, and that is the position that we will go into for financial year 2020. And as June quarter unfolds, we will review our position.
Okay, it's 3:20, about time that we should take in closing strategies. Keep in mind, we'll also talk about India Bulls Housing Finance, since that's nearing 900 now. But first, top closing strategies. Abhijit, if I can come to you first, your top closing strategy today.
Yeah, when we were talking last time, it was almost at the low of the day. I said it might be range bound, and I had suggested shorting a straddle 11,700. That was around 305 that time. It is already 10 points down. So I suggest continue with this, and we might see a bounce tomorrow morning first thing. And even if it's going down, I don't expect 11,500, 550 to break.
I think something's up with Jet Airways. You should pull that stock up on your screens. It's now up 4%. So quite a sharp move that's come into the counter. The morning lows were somewhere around 240. From there, it's seen a 24-point move to where it's currently trading at right now. So big move of almost 10% intraday for Jet Airways is what we've got. Coming in line with what's happening with Indigo as well, which in today's session is not trading all that badly. Would you be a trader at all, Brijesh, on a Jet Airways or an Indigo?
See, Indigo morning I was in some channel, I was in some other channel, and I recommended that time it was been trading somewhere around 1388 if I'm not 88, and my stop loss was 1348 and target was somewhere around 1440. So I think the target has been achieved, or it's been near that target. So I required that Indigo required to give a closing above 1450 for the next upside rally. But if we take a chart of a Jet Airways, definitely it's looking good. Right now at 263, the stock has been quoting. The stop loss would be a little bit deeper, somewhere around 255. One can take a buy call in it and play for the target of 272 to 275 juncture.
What about your closing strategy, Brijesh?
I have 3 buy calls, Neeraj.
If you can, Brijesh, if you can have the first strongest one.
Okay, so I go with the Bata. Right now on the hourly chart, the stock had been making a bullish engulfing candlesticks, and it's been trading somewhere around 1403 or say 1404. One can take a buy call in it with a strict stop loss of 1385 and play for the target of 1435 to 1440. And if I'm not mistaken, the 52-week high is somewhere around 1427. So if we are giving closing about this 1427, then we can see a rally of say even 1490 in coming days.
Okay, so that's his top call. I presume you have one more call, Brijesh, very quickly.
Okay, so another call would be, we can go with the Stride Pharma. The stock is been moving up with making the high lows formation in an oscillator somewhere around 495 or 496. The stock has been quoting. We can take a buy call in it with a stop loss of 488 and play for the target of 510 to 512 level.
Okay, Mayuresh, Indiabulls Housing Finance 903, they gave their quarterly updates as well. The stock for the last few days has been on the winners list. The 1 month returns or the 7-day returns are about 24%. Are all the good news in the price in the short term?
From a short term, yes, I would call that, Neeraj, because the move has been very, very staggering. And again, I think all the issues related to housing finance companies, I think they're trying to get over these issues one after the other. So I think the capital raising plans that both IBUL Housing has and the housing finance companies or the NBFC units in general, I think is obviously a step in the right direction as much needed as well. The second element of obviously the NIMs and spreads probably getting contained, I think they should also probably start stabilizing and improve gradually as the demand starts coming through. The third element obviously is the overall disbursements in AUM growth, and a subcategory of that would be also the securitization that these companies are embarking upon. So all these factors should probably lead to a reasonable amount of earnings as well as the AUM growth, followed specifically in terms also by stability in asset quality numbers. So again, I think the kind of return ratios that the company does post and the expectations of earnings momentum to start catching up, along with the capital raise fueling the balance sheet expansion, I think that probably keeps the book value at elevated levels. So yes, I think the move has been pretty sharp from a short-term perspective, but any investors holding the stock at lower levels should continue holding.
It's actually quite a divergent move within the housing finance space itself today. So while Indiabulls Housing Finance and PNB Housing Finance are gaining ground in today's session, you've got losses in Repco Home Finance, LIC Housing Finance. So these are the, a few of the stocks within the same pack that have seen a knock in trade today. From a trading perspective, Brijesh, any of these housing finance stocks?
We can look out now PNB Housing Finance on a shorter term time frame. The stock has crossed its previous swing high and has been moving up consistently. So somewhere around 960 where the stock has been quoting. So if one wants to go for a long side, can keep a stop loss of 945 and then play for the target of somewhere around 1000 rupees or even 1020 can't be ruled out.
Okay. Mayuresh, before we let you go, one conviction buy call that you would have from a medium term perspective?
No, so I think we keep on talking about the Godrej Group. So I think Godrej Industries probably looks very, very interesting, Davina, because I think it's got a mixture of all the elements that the group probably operates out of. So the consumer business probably in a little bit of a frenzy at this point of time, because I think the volume growth, specifically in household insecticides, is a little bit on the softer side. But I think hair colors is probably offsetting that. They've got significant stakes in Godrej Agrovet, Godrej Properties as well, which has produced a very reasonable amount of sales numbers. So again, a large element in terms of the expectations of the subsidiaries expected to do well and perform better from an earnings perspective. And even if one probably accounts for the holding company discount, I think the earnings momentum from all these combined entities and subsidiaries profit also accounted for that should do better. So I think Godrej Industries is something which can look very, very interesting over a longer period of time. With a clear disclaimer, we own this stock in our funds.
Okay, Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us today. So now we also have Godrej Properties in that list, very interesting. And while we've been talking about the gainers all through and through, we'll end the show with a quick comment on the losers today. Abhijit Pathak, ITs look significantly weak. TCS down 3%, HCL Tech a couple of percentage points, and Reliance is the other one which has looked slightly wobbly today. Is there something that looks weak enough for some more downsides?
Just like I said in the morning, Reliance is definitely weak, and it should be, I mean, it is a short-term rise unless it closes above 1395, 1400. Until that time, I expect it to go towards 1320, 1330. And maybe what happens at 1300 will decide whether it is going to resume its uptrend or it is going to correct further.
Okay, so Abhijit is betting on Reliance as looking like maybe slightly wobbly. IT names maybe not so much. We'll probably talk about the Nifty IT post close, but let's start wrapping up the markets. Less than 3 minutes left for the markets to shut shop. About 1/3% lower, 0.5% lower for the Nifty Bank. Bad, but not terrible. I think at a point of time, the Nifty Bank was down about 0.8%. So it was looking very weak. And now not looking as weak, but still. The weakness continues. It's sub 30,000 the close. So all of that important variables. And today on fairly high volumes as well, both for the FNO side too. The mid caps and the small caps too have looked wobbly today. About 0.5% odd for the small cap space. The market, but it would have looked slightly iffy in trade. Devina will speak about that. Let me talk about the large caps and what's moved and what's not. So firstly, on the gainer side, Indiabulls Housing Finance, stellar run the last few days, and in today's session too, about 3.5% higher. Z, 3.5% post the deal broken by Bloomberg News, or the potential of a deal, let me put it that way. Tata Motors 2.5%, Orient Cement has some gains. Autos have come back in a way because it's Tata Motors, Hero MotoCorp and Eicher, all three of them in the green, and HDFC bringing up the rate sensitive pack as well. Across the 3.5 lakh crore market cap mark as well, did HDFC. What's not done well? IT stand out. So TCS, HCL Tech, somewhere down there, Wipro. There is weakness in the metal, in the commodity names like BPCL, Hindalco. Yes Bank fundraising plans, again a Bloomberg story, down about 2 percentage points. IndusInd Bank weak, and Reliance, the big boy, amongst the top contributors on the losers side today. The tussle between TCS and Reliance, I reckon, for the top spot on the losers side. But both of them have looked slightly wobbly today. What about the broader end of the spectrum, Devina? How have stocks looked here?
A smidge of an outperformance for the mid caps and the small caps versus the large cap index. No doubt they've ended in the red too, but I think about 0.25% on the mid cap and the small cap indices. Taking a look at the few gainers in today's session, we're not all hope lost. So you have a few stocks that are doing well. Orient Cement, second day on a trot, is doing well. So that stock's gained heavy ground. About 9% in intraday trade is what you've got for an Orient Cement. The other one is a Lakshmi Vilas Bank. This stock, day in and day out over the last 7 days, has seen heavy gains, tallying totally up to about 40% in the last 7 days for this particular counter. Jet Airways intraday has seen a 10% move. It had a low of closer to 240. From there went all the way up until 264, 65, and that's closing in on where we're going to see the close as well. So about around 261, 62 is where it's going to close. Indigo follows suit. That stock's doing well. SRF, going to operate the Dahej plant. And that one is doing really well, about 4% higher by the end of trade today. Godrej Properties continues to do well. They just announced their joint venture in Mumbai just today. Day in and day out, some positive news heading the stock forward, making new highs as well. Punjab PNB Housing, that's the other one that's doing well, following suit with what Indiabulls Housing is doing. However, it's a split pack, so Repco Home Finance doesn't probably match up to the gains that you're seeing in the other housing finance companies. That stock in today's session is down about 6.5%. Vodafone Idea continues to reel under heavy pressure. DB Realty, Inox Leisure, Ujjivan Finance, LIC Housing, that's the other one within the housing finance space that looks weak. And Reliance Infra, that's probably going to end the day with losses of about 2.5 to 3% right now. So second day on a trot for the index. Today is the weekly expiry on the Nifty as well as the Bank Nifty. The Nifty and the Bank Nifty have been at a weak spot with the last two trading sessions.
Certainly have been, and let's see if that weakness persists. The volumes today will come up on your screen, would be higher. I'm interested in the cash market volumes, see if they they match what happened yesterday as well. So 35,000 crores. The FNO volume steadily, even though it's expiry day, I know, but this is a large number, and steadily these volumes have been moving up every weekly expiry.
Yeah, yesterday I think it was closer to 10.
Yeah,
so we have been seeing the volume pick up, and this is the result of both the Nifty as well as the Bank Nifty weekly expiry taking shape. But in terms of contributors, over the losers and gainers, today's session, HDFC Limited, Asian Paints, Indiabulls Housing, they contributed on the upside, but not so much so in order to tip the balance in their favor. Reliance, the heavyweight there, TCS again a heavyweight, and Infosys, all of them looking weak and dragging the index lower.
Yeah, the market breadth has looked weak, and I also want to see what VIX has ended at. The breadth has looked weak, so almost 1:2 or maybe 2:3 in favor of the declines. No surprise that the breadth would have looked wobbly today. But India VIX, okay, a small corrective move. It was in the green around the time of the policy.
Yeah,
and
but it's still at those heady levels of 18.5. And we've been talking about how both the Nifty and the India VIX over the last 3 weeks have actually been moving in tandem, which is indicative that there is some hedging in the system. Probably pointing towards a correction which has culminated over the last 2 days.
Yeah, the last few days have certainly looked wobbly in trade. Anyways, final thoughts from our experts. Abhijit Pathak, we spoke at the start of the show of how the bank or the Nifty bank could do. And on the spot, it's 29904 for the Nifty bank. That's looked particularly vulnerable. Depending on the conditions that you set, what are the lower levels that you envisage for the Nifty bank?
Like I said, it is still strong as long as it is above 29,700, 29,800, 29,800. So near the support, it can be a buy on dip with a stop loss below 29,600. And again, on the higher side, it might not cross 30,500 very soon. So it might remain range bound in this 700, 800 points.
Breaks those levels, Abhijit?
Sorry?
What if it breaks those levels?
Then there can be, it can maybe go down by another 500 points towards 29,000.
Rajesh, what about your closing comments?
No doubt, at least we have closed near the 11,600 mark, and till Nifty has been trading around 11,400. Chances are that Nifty might try to break the all-time top, and we might try to touch 12,000 marks in this April series. But for a very short term, it's been concerned, then 11,400 and 11,550 would be the level to watch on a downside. Whereas on the higher side, it's been concerned anything on closing basis or 11,670. Chances are that Nifty might try to touch a level of 11,760. Whereas the Bank Nifty has been concerned, 29,700 to 29,750 band would be acting as a support. If that thing breaks, then 29,500 would be the trend decider. If we are closing below this, then the parties would be over for a Bank Nifty for a shorter term time frame. Whereas on the higher side is been concerned, 30,250 would be the resistance zone. So I am looking Bank Nifty trading in this range of 30,250 on the higher side, followed by 29,700 on the downside, and this consolidation would be there. Then chances are that we would be breaking the higher end of the Bank Nifty.
All right, gentlemen, thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. And with that, it's a wrap on this edition of Countdown from Devina and me and the team that put this show together. Thanks so much for watching. Here out though, as we wrap up, Manishi Ray Chaudhary of BNP Paribas on why he remains overweight on Indian stocks.
It's likely to continue for a couple of reasons. Number one, we are seeing a secular decline in cost of capital. That's likely to increase the ROE to COE gap even further. Second, private sector capex, which was sort of being hoped for last 3 to 4 years, now actually seems on the cusp of commencing, because capacity utilization levels are about 78 to 80%, and that's when companies bring back those decisions on the drawing board. And third, we are also seeing a degree of earnings stability in certain sectors, like financials, where we are clearly behind. The worst of the bank's asset quality problems are clearly behind us. So that's why I think these fundamental factors are contributing to this rally. And at the same time, we are also seeing bullishness on the part of FIIs as a consequence of the hope of the same government continuing post-elections, even though that's historically been impossible to predict.